Happy new month to you all, and welcome to my weekly series of price action based technical analysis. It's time for a fresh perspective on the XAUUSD market structure as we are going to be unveiling potential trading opportunities for the upcoming week. With less than rosy data emerging from the US labor sector, the gold commodity being a safe haven asset has taken center stage for traders and investors in recent times. In fact, during the course of last week's trading session, the technical setup we had yielded over 600 pips in price movement as trading activities was driven primarily by buying sentiment due to the poor US labor market figures, as you will be seeing here in this commentary. If you are interested in reviewing this commentary for educational purposes, find the link in the description box below or at the top right hand side of your screen if you are watching from my YouTube channel. So, in preparation for the new week, I have conducted a comprehensive analysis of the current market structure utilizing simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of the gold commodity market. But before we begin, please remember that this is for educational purposes. I mean, this video, and it does not constitute any financial advice at all. My objective is to equip you with insight into the XAUUSD chart and enhance your proficiency in price action analysis. Forex trading carries inherent risk, so proceed with caution and consider consulting a professional financial advisor before making any investment decisions. With the groundwork set, let's jump right into the business. So here we have our center of focus for this session is going to be on the daily time frame where I was able to identify a simple setup that we can use to guide our trading activity for the new week. Now on the daily time frame, these are the levels, trend lines, and structures I was able to identify. Now, if you look at the nature of price action since the beginning of this year, it is quite obvious that price action has been bullish, as you will see that since the month of March, we saw our price action found an impulsive move to find a new high at a $2,078 level. And since that moment, that was in the month of May, we saw our price crashed back into the 1,890, the 1,900 zone. And one thing we have observed here in the last couple of months is how the 1,900 and the 1,890 level had been a strong buying niche in this market. We saw that when price comes into this area, we saw how sellers have struggled as every point in time sellers try to break through the structure. We have seen how buyers jumped in to negate that potential. The same thing also happened here during the mid month of last month, of course. We saw buy pressure again resume from that area. But there's one thing here that we would like to take into consideration, and that is the descending trend line. As you will see, connecting the series of lower highs, we have a beautiful descending trend line to work with. Now, despite the appearance of a descending trend line, which of course emphasizes the presence of sellers in the market, one thing that is clear here is the inability of price action to find a new low, which curtails the potentials that sellers could push price to the downside. As you will see, how the 1,890 has become a very strong barrier in that regard. Now, to guide our trading activity for this new week, I have identified a key level that we are going to be using to guide our trading activity. Now, if you look at what has been going on in this market since the month of March, you will see how the 1,950 level had been a major determinant of price action. Look at what happened here in the month of March. We saw how this area was a buy niche. We saw some choppy situation go on here before price broke down that structure. We saw the same thing happen around here in the month of July before price action came back to close right around that structure during the last week's trading session. Now, you would agree with me that we are at a crucial juncture in the market right now where price action shares a beautiful confluence with both the descending trend line and this key level at the 1950 level. Now, the question going into the new week is that will price action respect that descending trend line one more time to push price to the downside? Or are we going to be having a situation where price will break out of that descending trend line to emphasize the strength of the buyers to push price to the upside? Now, to answer this question, we will need to scale down into a much more lower time frame to see how participants in the market have been reacting to the structure, and at the same time see how we can position ourselves within the zone ahead of the new week. Now, before I scale down into the lower time frame, it is quite important that we take a look at the fundamental factors that are likely going to be shaping the landscape of this market in the coming week. And of course, the anticipation of this event too as well has an influence on price action too. And of course, for those who have been with me since I started this platform, you know that these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns, hereby giving us valuable information that will help us to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after the event. So, on the economic calendar right here, we shall be focusing on high impact events from the US economic docket. And for the coming week here, we only have one single high impact event for this week, and that is the ISM Services PMI. This is the Institute for Supply Management Services Purchasing Managers Index, and it is a monthly economic indicator that measures the health and activity level of the services sectors in the United States. So, this is one event we shall be looking forward to, and of course, the anticipation of this event will reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame where I have a simple setup that we shall be using to guide our trading activity for this week. Now, on the 4 hours time frame, I was able to take into consideration the nature of price action in the last 2 weeks. And of course, what you will see here is a bullish momentum. And in fact, I have a couple of trend lines here to emphasize the strength of the buyers in this particular market. However, if we zoom into what happened last week, you will see that as soon as price action found a new high at around the 1950, which I mentioned earlier on the daily time frame as my key level for this week, we have seen continued selling pressure around that area, leading into a situation where we have a consolidation phase where price is confined within the 1950 level and of course the 1935 area to emphasize the level of indecision at this point in time. And you know how we do it in this community. Whenever price action falls into this kind of range, we want to exercise patience, waiting for a signal to come in the form of either a breakout of the resistance line to give us an opportunity to buy, hereby respecting that ascending trend line one more time, or the breakdown of the support line to give us an opportunity to sell. Now, Looking at the structure closely, you would agree with me that we are at a crucial moment in this market where, from this current market structure, both buyers and sellers have the potential of pushing price in their favor. In fact, the structure could incite an uptrend continuation, likewise, incite a reversal move. So, let's talk about the potentials of sellers at this point in time, first of all. Now, if you look at the structure, the only condition that will make me want to be selling the XAUUSD this week is for price action to break down the 1935. And in fact, if you look at this closely, it also shares a confluence with that ascending trend line. So, a breakdown of the ascending trend line will, of course, be a sign that the trend line may no longer have the capacity to continue to negate the seller's attempt. So in that case scenario, I will be looking out for sell structures patterns to join a bearish move. However, if price action moves in the opposite direction instead and goes on to break out of the resistant line at the 1950, then this will be a good opportunity to join an uptrend continuation. So this is my view here on the XAUUSD for this week. So we shall be waiting patiently to see how the market participant will be reacting to this current structure to determine what our next line of action will be. And trust me, I will be with you in the comment section of this platform to give you updates during the early hours of the week after monitoring how price action is going to be reacting to the structure. If you have found this content helpful and useful in making your independent trading decision on these assets, I would really appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find this material beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.